All right, let's dive right into this explainer. Today, we're unpacking a highly dense, incredibly ambitious trading manual known as Ultimate Trading Bible V3. This source material attempts to do something you rarely see. It actually tries to synthesize multiple, complex market theories. We're talking price action, smart money concepts, and inner circle trader methodologies, all into one master framework.
So it poses this massive, almost impossible-sounding question right out of the gate. Is it actually possible to build the all-trading system you need, the absolute only one? Because in a world completely full of conflicting indicators and constant noise, this document argues that by stacking core foundational blocks up into an advanced fusion strategy, you can completely decode the market. So, we're going to use this same building block approach today to see exactly how this unified system works.
Here's our blueprint for today. We'll be hitting the foundations of price action, smart money concepts, inner circle trader mechanics, the ultimate fusion strategy, risk and psychology, and finally, a 120-day trader roadmap.
Part 1. Foundations of price action, the language of the market.
Look, before you can predict the market, you really have to understand its language. The source emphasizes finding the smart money by looking for what's called a displacement candle. Now, this isn't just your run-of-the-mill market fluctuation. It is a candlestick with a massive body, very small wicks, and crucially, it closes way beyond previous structural levels. When you spot a displacement candle, you are essentially looking at the unmistakable footprints of large institutions entering the market. These are fast, aggressive moves that tell you exactly where the big money is positioning itself.
Part 2. Smart money concepts, hunting liquidity.
Moving up our pyramid into smart money concepts, you're going to hear a ton of acronyms. So let's act as a translator for arguably the most critical one, CHOACH, or change of character. Imagine a strong uptrend that suddenly just breaks its last higher low. That specific break, that's the CHOACH. It's basically the market flashing this massive warning sign that the tide is turning. It is the very first structural break against the current trend, signaling that a major, massive shift in direction is likely imminent.
Okay, so where does the price actually go after that shift happens? Enter the FVG, or fair value gap. This is a very specific three-candle pattern where the wicks of the first and third candles completely miss each other. They just don't overlap, which leaves a literal gap on the chart. The crucial takeaway here is that this gap represents an imbalance. Institutions moved the price so incredibly fast that they left unfulfilled orders behind. Because of this, the FVG acts like a magnetic zone. Price will very often return to this exact gap to rebalance those orders before continuing on its trend.
Part 3. Inner circle trader, predators, and prey.
Now, this is where some real drama enters the charts. It frames market movements as a highly calculated hunt. On one side, you have your everyday retail breakout traders. Their strategy is pretty standard, right? Wait for a resistance level to break and immediately buy the breakout. But the source introduces this brutal institutional counterattack known as turtle soup. Basically, institutions will intentionally push the price just a few points past that high just to trigger the retail breakout buyers. And once those retail traders are trapped in their new positions, the institutions reverse the market hard in the completely opposite direction, essentially consuming all that retail liquidity.
And this brilliantly illustrates how that kind of manipulation actually happens on a very predictable daily schedule called the Power of Three, or the AMD cycle. First up, accumulation. During the Asia session, price basically just moves sideways, building up these big pools of liquidity above and below. Second is manipulation. As London or New York opens, we see a fake move. They call it the Judas swing, and it is designed to sweep one side and trap retail traders exactly like that turtle soup trap we just talked about. Finally, distribution. The real, powerful move happens, targeting the liquidity resting on the completely opposite side of the board.
Part 4. The ultimate fusion strategy, putting it together.
So how does this all build into a core, actionable takeaway for us? Well, here is how you turn hundreds of pages of complex theory into a super simple 4-step fusion checklist. Step 1, you determine your daily bias using higher time frame structure. Step 2, you mark your liquidity targets, things like the previous day's high or low. Step 3, you patiently wait for that turtle soup manipulation. You're literally waiting for the market to sweep that level and trap the early traders. And finally, step 4, once you see a change of character indicating that the trap is sprung, you enter your trade right at a fair value gap. This exact synthesis is presented as the ultimate edge in trading.
Part 5. Risk, control, and psychology,
the real holy grail.
Now, here is where the source totally flips your expectations. The real secret to this whole system isn't some magical chart pattern at all. It's mathematical control. Surviving the market is just pure math. The golden rule here is a maximum 1% risk per trade. Notice how the math actually works. If you have 100,000 rupees in capital, your risk is capped at exactly 1,000 rupees. If your stop loss needs to be 30 points away, you trade 33 units. But if the market requires a wider 50-point stop loss, you reduce your quantity down to 20 units. The actual money at risk literally never changes, only your position size does. It's brilliant.
And you know, this strictly mechanical approach to risk feeds directly into the psychology you need to survive. I absolutely love this quote from the source. The market doesn't know you exist, it doesn't hate you, it just hunts liquidity. Delivering this kind of powerful truth is really meant to help you completely detach your ego from the screen. A loss isn't a personal attack on you, it's simply a business fee paid in the crossfire of institutions hunting liquidity.
Part 6. The 120-Day Trader Roadmap.
So how do you actually implement all of this without totally blowing up your account? The author provides a really rigorous chronological roadmap designed to build immense discipline. For the first 20 days, the absolute rule is no trading, zero. The focus is purely on marking 5 charts a day, just identifying structure, higher highs, lower lows, and previous day levels. You are purely learning to read the language before you even attempt to speak it.
Fast forward a bit. By days 41 to 55, which is phase 3, the trader shifts focus heavily onto identifying those institutional traps. The specific goal here is to find 50 turtle soup sweeps on chart replays. You're basically training your eye to see exactly how and where the institutions manipulate the retail breakout traders we discussed earlier.
Get this. It isn't until day 91, that is 3 full months into the process, that you are allowed to trade live. And even then, it's with just one single quantity and a tiny 0.5% risk. The goal here heavily emphasizes process over profits. You are just testing your ability to execute the A+ setup without the blinding pressure of making large amounts of money.
When you zoom out, this entire 120-day timeline reveals the sheer immense patience required to actually apply this trading Bible. It forces you through the foundations, core concepts, backtesting, and tiny risk long before you ever scale up for consistency. It is a massive reality check for anyone out there looking for overnight riches.
The text wraps up with these golden rules that you should honestly tape to your wall. Interestingly, rule number 8 states that proper physiology, like getting enough sleep, drinking water, taking walks, is actually greater than strategy. It points out that research shows decision quality drops 30% with less than 6 hours of sleep. You could have the ultimate fusion model dialed in, but if you're sleep deprived, you're still going to fail.
Which really leaves us reflecting on the true challenge of this entire explainer. The smart money concepts, the turtle soup traps, they are all laid out so clearly here. It truly might be the all-trading system you need, but the ultimate question remains: do you have the discipline to master yourself before you try to master the market? Thanks for joining me to unpack this fascinating source. Catch you next time.